some people say, well, you need insurance. I don't believe anyone needs insurance. I believe it's a choice, you know, and I think that choice is, do you want it? Do you want to protect your family? Is this important to you? What risks are you transferring? Because we have a few options with risk. First option is we can just say, we're going to retain it. We're going to take it on. But then we take that stress and that pressure and that burden and that concern, or we can transfer that risk, right? And transferring risk, we have to look at, with insurance, the way I judge it is, could I spend $1 to get a lot more than $1 of coverage? It's got to be that way. Money can be complicated. Let a nerd help you. We're here to demystify the complex nature of money by getting you answers from financial nerds and whiz kids. Welcome to Ask the Money Nerds, a weekly segment of the Wealth Labs podcast where we answer your most pressing money questions. A healthy individual is 4 times more likely to become disabled before age 65 than prematurely die. Isn't this an exciting start to a video? Look, I get it. Disability insurance is one of those insurances that I put off longer than anything else. And you may be asking why you should consider it in the first place, and when it's a good idea, or when is it too expensive? And how much is a good amount to have, and what are the different types of policies that are out there? Look, far too often these plans are flawed, and they don't even provide adequate coverage in the event of a disability. So what are the right provisions to have, and how do you know if you have the policy that works? I'm going to bring some energy to a normally dry, drab, painful topic of disability insurance. So, Stolba, I know you're tired today, but thanks for being here anyway.
I'm feeling your energy.
All right, cool. I mentioned, I'm like, you know, I'll tell some jokes. You're like, well, what if I don't laugh? I'm like, you always laugh at my jokes. That's the main reason you're on here, Stolba. Yeah. Come on.
That's why you pay me is to laugh at your jokes, huh?
It's painful.
You know, disability insurance does go by the wayside a lot of times. We know home insurance is important, auto insurance is important, but...
Well, those are almost like required, right? If you have a loan, you have to have a homeowner's policy. If you drive a car, states require you have it, whether you do or not. And nobody really likes to think about becoming disabled. It's one thing to get in a car accident and have your car repaired, but it's another thing to be like disability. But like, disability doesn't mean you're like quadriplegic.
Right. I was going to say we have to broaden our definition of disability here so people understand it.
The majority of the time it's an ailment or a sickness or it's a temporary state that people don't actually have permanent disability, but they have disability long enough that it actually can become detrimental to their finances.
Yeah. So in our business at Wealth Factory, we work with a lot of chiropractors, dentists. It's a lot of hands-on work. So if, let's say, a chiropractor was out skiing or snowboarding this winter season, injured his arm or her arm, right? That would qualify as disability insurance because they wouldn't be able to adjust their patients.
Right. Hopefully. But here's the deal.
Oh, there's a catch.
Yeah,
there's always a catch.
Ask the question, and I'm going to answer these things because if people don't know the 5 main things that are inside of a disability policy and don't have these 5 things checked off, the coverage is almost useless. Like, think about the reputation most insurance has. People don't feel inspired by insurance. They feel like, I got them paying, and like these insurance companies are trying to get away with anything they can. Disability is one of the main culprits of this. There's a lot of people that have coverage that is garbage. So I'm going to help them that if they're actually spending money on this, it'll be on the right types of insurance and understand how to design it properly.
Okay, so I'll get into Jake's question then. He says, I'm a chiropractor and I want the stability and confidence in the event of injury or a non-death incident. An advisor has recommended a business overhead expense policy at $1,200 per year premium, a long-term disability policy at $4,000 a year for the premium. Both are from Mutual of Omaha. We're in a very strong financial position, heavy cash, and have 2 whole life policy vaults. I know disability insurance is important, but it just seems super costly. So what are your thoughts? How do we help Jake and others develop a plan or a policy that includes all these 5 things you previously mentioned?
Well, some people think, okay, if I'm economically independent or I have enough cash flow to cover my basic expenses, then why have disability insurance? Well, I still have it. And the reason is because if I were to become disabled, that would be detrimental to my legacy as far as financially. I would now become a financial burden rather than a financial provider, right? Depending on how severe the disability is. And because I want my family to live the same quality of life and I'm trying to build generational wealth, where I could pass this on for generations, where we can exit the banking system, have our own banking system within our family, finance businesses and interests for the family to incentivize them, to leave them with opportunity. And if I were to become disabled, that could be a problem for that. You know, it's interesting because I think before someone's ever disabled, they think, I'd be fine. I've got this. But you know, we've had clients that became not permanently disabled, but partially disabled, like a dentist that got in a 4-wheel accident. and had the policy designed right, and it made a huge difference. So we'll talk about that. But I get it. It's like we got to go back to the 3 measures of worth: price, cost, and value. Price is what we pay. It feels expensive, especially because we're just writing checks and we hope to never use it. This is more than anything, right? Then the second thing is there's the cost. The cost is the net impact. So there is no like real direct benefit to disability insurance financially, but the indirect benefit comes from peace of mind. The indirect benefit comes from knowing that you've transferred that risk, knowing that if something happens, that you've got things taken care of, so you don't have to have extra stress or worry, or if you actually become disabled, then you have to have this additional financial pressure if there isn't a disability policy. And then the last piece is value. So the value for me is kind of the same as the cost. I just have peace of mind knowing that it's there, right? I don't think about it every day, but I know that I have it. And there's 3 main policies that you can look at. One he mentioned is a business overhead expense policy. So that's for a business owner that if they become disabled, you maybe it kicks in after 30 days or 60 days are the 2 main common elimination periods. And then it can go for 12 to 24 months. And what it does is it just covers all the expenses of the business. So the employees and the rent or the mortgage or all that kind of stuff. And it kind of reimburses that. So it's a very short-term type of policy. It's partially why it's more affordable is because it's not going for long periods of time, but it could be instrumental. So I have a business overhead expense policy.
Okay.
And then there's the personal disability policy, which think of it as whatever amount you don't have covered if you became disabled is your deductible. And think about it. Some people have a $100 or $1,000 deductible on their car insurance. That's pretty minimal. But let's say you're used to getting $5,000 per month coming in, and all of a sudden you're disabled and you don't have insurance. Well, that's $5,000 a month that's not coming in anymore. If you have $2,500 of insurance, what it means is, well, you got $2,500 deductible. $2,500 is on you, $2,500 is on the company. I want the company to be on the hook for as much as possible if I'm ever going to carry disability policy. Because I don't want to have a situation where it's planned bankruptcy, meaning, yes, there's coverage there, but it won't cover a mortgage, it won't cover a car payment, it won't cover the basic necessities in life. And I think that in disability, expenses are more likely to go up, not down, because you might have to build specific things to support with it. And, you know, for me, if I was just sitting around all day instead of working, I would probably spend more on Amazon, you know, those kind of things. And the third type of policy is if you have a business partner, and it's a disability buyout policy. Now, there are some other peripheral type of policies, but those are the big 3. Okay. And it's really important if you have a business partner that if something happens to them, you don't want to like, now you're carrying the burden for both of you. You know, you can have the disability policy pay them out so that you could own the business if they're no longer going to work in it.
Okay. So for someone who's, let's say, an independent contractor, a freelancer, they don't have a building that they go to work, that they own for their business, or there's not employees on their payroll yet. Can they still get a business overhead expense?
It's unlikely that they're going to, you know, qualify for a business overhead expense. They're going to deal this with a personal disability policy. Okay. And in the personal disability policy, I talked about 5 main factors that we want to consider. The first one is called own occupation versus any occupation. So own occupation would say, you know, if you went to school, like this person's a chiropractor, right? They went to extra school to get this designation. Own occupation says if he can no longer be a chiropractor, but he can do anything else to earn money, become a real estate investor, become an educator, something like that, he can still get his payment for his disability policy because it's protecting his professional piece. And any occupation would say, well, if you could get any other work, we're not paying the disability claim. And Tim, who's one of our money nerds, right? Tim Carden, he once had a claim because of some issues when he was back working for the power company, and it was any occupation. So Liberty Mutual basically just like, sorry, not paying. Because he could do other things. He could teach, right? So own occupation is the first thing to look at. The second thing to look at is called a residual rider. So residual rider came in really handy for this dentist that got in a 4-wheeler accident because after, I don't know, like a year or 13 months, he started doing dentistry, but only at about 20% at capacity because of soreness and injury and mobility. And so what happened is he got a little bit less disability payout, but still got the difference between what he was earning versus what he was earning before. Yeah. So if you don't have a residual rider, they might say, oh, well, you're back at work. Well, you might be making 1/5 of what you're making before, but they don't pay out. So residual riders are key. Okay. See all that, like,
this is good stuff to know.
It kind of pisses you off though when you think about it. Like, okay, people think they have a policy, but there's all these outs. I mean, insurance companies are in the business of making a profit, and disability insurance has been abused in the past, where people used a lot of like, I'm mentally taxed and so I'm disabled, and then they made claims, and all of a sudden they had to create all these additional provisions. So I'm not putting it all on the insurance company, but I mean, we got to be really educated on what we're doing here. All right, ready for the next one?
Cost of living rider.
Yeah, the cost of living rider. I mean, inflation. Like if we go back when we were little kids, you're a little younger than me.
Not that long ago.
But like, you could buy things a whole lot cheaper.
Oh, yeah.
Like when I think about what I spend for dinner for my family versus what I think about what I spent just for, food back in the day, it's drastically different.
Yeah.
Or, vehicles or houses and all this kind of stuff. Inflation exists. So cost of living would say, as the cost of living goes up, your disability payout goes up as well, so that you're not having inflation start to confiscate your purchasing power and your lifestyle. It kind of offsets that a bit.
Are these two riders that you've already mentioned, the
residual, own occupation,
and the cost of living? Is this almost like a whole life policy where every rider that you add to the disability policy is an additional fee? Yeah,
these are definitely going to change your pricing for sure. But again, it's like, some people say, well, you need insurance. I don't believe anyone needs insurance. I believe it's a choice, and I think that choice is, do you want it? Do you want to protect your family? Is this important to you? What risks are you transferring? Because we have a few options with risk. First option is we can just say, we're going to retain it. We're going to take it on. But then we take that stress and that pressure and that burden and that concern, or we can transfer that risk, right? And transferring risk, we have to look at, with insurance, the way I judge it is, could I spend $1 to get a lot more than $1 of coverage? It's got to be that way. But if I don't have that insurance, I'm using at least $1 of my money to protect that situation, at least, if not more, right? Because it might have more cost to it. So I'm looking at using the insurance companies as an efficient way, and proper design of the policy is key. So we've talked about cost of living. We've talked about residual rider. We've talked about own occupation. The next one that's been really important for my disability policies is I have a guaranteed purchase option on mine.
Okay, so what does that mean?
So it's easier to qualify for life insurance than it is for disability insurance, because you might have a sore back as a chiropractor and like, well, we're going to have an exclusion, or we're not going to offer that. So they're definitely more strict and stringent from what I've seen with disability than they are with life insurance.
Yeah.
And so a guaranteed purchase option says, if you have a health change, you can still get more disability insurance because you have this option. And I've had cysts on my kidneys. So I bought 3 additional policies since I first bought my original policy, because my income went up. And so I've been able to get more disability insurance where it otherwise would have been denied. So something to consider, especially because this is a little bit more, and then the last thing I'm going to talk about on this before we move to kind of like overall structure and design, because I want to make sure that people get the most bang for their buck when it comes to insurance. But the last piece is how you pay your premium. There's graded premium or level premium. So level, you just kind of know what you're paying. Graded is going to go up over time. And so it really depends on cash flow, and you can analyze cost of money. If you watch some of our other videos on cost of money, like if you have better opportunities right now, or you have less cash or things like that, you can kind of analyze which one's better for you. When would a gradual payment method be a good idea? When you're like starting a new business and you have a lot of expenses right now, and just cash flow is a most critical concern. So it's going to go up over time, and you have a little bit better situation now. Level might pay less long-term, but we have to look at what's the value of those dollars that you're paying more for today. Yeah. I think this is a little bit of a side note, but when you're talking about either retaining risk or transferring risk, I think there's this misunderstanding that entrepreneurs just take all the risk that they can. The best ones mitigate and manage risk and lower risk, at least if you want to be sustainable. Like a lot of the times we see that the rate of businesses going out of business decreases by simply setting up corporate structure, because you've now protected liability. You might even save taxes. You're making better decisions. Like this notion of, it looks risky from the outside when people do things you don't know how to do. And sometimes you see people that get really wealthy. And yes, we have those stories on the fringes of someone that risked it all and they made it and they were living on someone's couch. And yeah, those are very romantic business stories, but they're not the reality of the majority of businesses. Yeah. And I think that transferring and mitigating risk is one of the key things that help you stay around for long periods of time to weather storms, whether it's a pandemic or whatever the hell we're going through, right? So those kind of things are really really important. So those are the 5 components. Now, when we look at policy design, the longer you can go without having the disability policy kick in, the better the coverage you can get overall. So if you have to have the policy kick in 30 days later for a long-term disability policy because you don't have any cash on hand, you don't have any savings, you're going to have a higher premium because the likelihood of someone making a claim over a short period of time is much, much higher than if you kick in after 3 months or 6 months. So the longer you can go where you can cover the basics or the small things on your own, but then have this for like the more catastrophic long-term consequences, I'd much rather see someone have a longer elimination period and get all those benefits, the residual rider, the cost of living rider, and all those kind of things, so you have the most possible solid coverage.
Okay. So would you encourage people who are fairly young, like college age, to start initiating policies?
I didn't do one in college, but I did one while I was still single. I mean, I think I might have been engaged at the time, so right out of college, I got my first disability policy. And I get it. Like, some people work for an organization and those group policies are really bad most of the time. If you look at the provisions, they don't have this kind of stuff. So you can do a hybrid where you have some group and have some of your own individual policy.
Okay.
And look, all this might be a really tough point if someone's struggling with cash flow. So that's when you go back to our other videos on how you restructure loans or refinance and renegotiate or reallocate funds to free up cash flow or save on tax or save on, investment fees that aren't performing or just reassess everything. I think that's really important because this is a conversation to have kind of after some of the other things, but it's still part of the foundation. Disability is part of the foundation, not sexy, not exciting. But you know what? I just have a lot more peace of mind knowing that it's handled, knowing that it's taken care of. And it's not something I sell. I think I got disability license way back in the day and then I don't even know if I've sold a disability policy. And I stopped selling life insurance in 2005. So, but I'm fairly versed on it because of, the experience of clients that we've had at Wealth Factory and what's happened, out there. And I get educated on it because I have an interest in it, even though that's weird to seem to have interest in this. Like
such a nerdy thing.
Yeah. No. So yeah, I mean, so is Mutual of Omaha the right company? I'm not sure. This is another point I want to make is they might be. But some companies are really good with blue collar workers where other companies are better with kind of like professionals that have like specialties. Like there was a company, with Mass Mutual or Berkshire were really good with dentists, for example, where standard insurance was really like better for some of the small community that I grew up in and offering disability to them that were more blue collar workers. So I don't know about that pricing exactly or what the provisions are or what the company is overall. That's something that I'd recommend to go to cashflowbanking.com, and they do have some people in their firm that specialize in disability and they can analyze it overall and give you a more concrete opinion. But I want to give the contextual kind of content to this. Like what is it? How does it work? And what to think about.
Yeah. This is, I think, an important reminder that it is a part of the foundation. It's something that can't be overlooked. And it's one of those things where I think we've given information you've shared, like when someone goes to get their disability policy, they'll have a better understanding of what kind of questions to ask and things to look for. And that's, I think, a big part of navigating situations like this is knowing how to engage with the agent that's selling you the product that you're needing to acquire.
Yeah, because everything that he's saying sounds okay. I just don't know the rest of the provisions. And yeah, there's a decent expense to this as there is in many insurance policies. Yeah. Want to continue the path to be a better investor? Make sure that you're not losing money and taking too much risk? Well, click here and learn about strengths vesting.